Hi, my name's Annabel and welcome to this step-by-step tutorial video on how to use our best-selling product, the UK Property Investment Analysis Spreadsheet. This product has been designed to analyse property deals made within the UK. This includes buy-to-lets, flips and HMOs. This spreadsheet compares finance options as well as different strategies. This video aims to run you through every element of this spreadsheet. At the end, I will show you some example scenarios to demonstrate how this works for different strategies. If you've already purchased this product, feel free to open it up on your device while watching this video. Equally, if you're watching to see if this product is right for you, feel free to take notes and reach out to me directly on Etsy if you have any further questions after watching this tutorial. All links to our listings will be displayed in the bio below. Even though this video is a demonstration of the UK version, this is also applicable for those using the international version, as it works in the same way. There are two key differences between the UK and international version of this spreadsheet. Firstly, the UK version automatically calculates stamp duty land tax, a property tax applicable in England, whereas the international version leaves this cell blank so you can add your own taxes suitable to the country you are looking to invest in. Secondly, the UK version uses the term bridging finance, whereas the international version uses short-term loan. Both are calculated the same. The only difference being that bridging finance is a popular type of short-term loan option for those investing in property. To view the full listing for the international version, please follow the links in the bio below. For this video, I'll be using the Google Sheets version. When you first open the spreadsheet, I highly recommend you read everything in the instructions tab first. However, as you're watching this video tutorial, I will be explaining the steps mentioned in this along the way. Please note that this tab contains instructions on unlocking the spreadsheet if you wish to play around with the formulas, but please do this at your own risk. If you are using the Google Sheets version, you'll notice a big instruction at the top of the tab. You need to go to File, Make a Copy, in order to edit this spreadsheet. This is because this is my master spreadsheet. I cannot allow editor access to my customers, as then everyone would be using it at the same time. Remember to save your copy under the property address name and save it in a relevant folder. Let's start in the Financials tab. The Financials tab is where most of your calculations will take place. It's divided into 5 main steps: purchase method, upfront costs, refurbishment, invested funds, and strategy. As a general rule, fill in this tab from left to right and only edit the cells highlighted in orange. Start by selecting your currency at the top of the tab and entering the full property address for the property you are looking to buy. Then choose how you plan on purchasing from the drop-down menu. You can select from cash, mortgage, or bridging finance. If you're using money from an angel investor, select cash for now, and I'll show you how to fill in these details later on in step 4. Once selected, you will see the relevant cells underneath turn orange. These are the cells you need to fill in for selecting this particular purchase method. Once you've selected an option, add your loan to value or loan to purchase, interest rate, and the number of terms you'll be borrowing for. You may be wondering why bridging finance says loan to value and the mortgage says loan to purchase. It's because bridging loans work slightly differently from mortgages. Bridging companies give you a loan based on what they believe the property is worth, as opposed to how much you paid for it. Therefore, this affects the deposit amount, as you may be expected to use more of your own cash if the loan doesn't cover this. If the bridging loan is the same as the purchase price, enter the purchase price into the loan to value cell. Next, we look at the column to the right, purchase costs. This section automatically calculates the deposit based on the loan to value in step 1 and the stamp duty land tax. Please bear in mind that this tax is based on the higher tax bracket for purchasing additional properties. The tax brackets are explained in the glossary tab if you want to find out more about how much you'll be charged. You also have plenty of room to add any other upfront costs, such as auction fees, bridging finance fees, planning and architect costs, a HMO licence, sourcing fees, or any other legal fees. The total purchase costs will be displayed at the bottom. Next, let's look at the refurbishment section. This is partially divided into 2 sections. The first half looks at your total refurbishment costs, i.e. what's your total budget. Based on this budget, you can set a contingency of your choice as well as a percentage for a project manager if you desire one. There are also a few spaces for your own costs. My suggestions include warranty, landscaping, drawdown surveys, as well as costs for furnishings, photography and staging. You may decide to lump this cost together and put this figure into the refurbishment cell at the top. If you want to obtain a more accurate refurbishment figure, I suggest breaking down your costs further. If you need a template to help you with this, check out our property refurbishment spreadsheet on our Etsy shop. It helps you break up the work needed based on the different areas of your property. There is room to add quotes and estimated costs, as well as an interactive Gantt chart and several graphs and charts to help you break down your budget. Once you have determined your refurbishment figure, you need to enter the estimated length of the refurbishment. In other words, how many months would it take for the refurb to be complete? If you plan to sell this property later on in step 5, I would recommend also including the time it might take to sell the property, as you'll have to pay the monthly bills and other expenses until you sell it. If you don't plan on refurbishing the property, please enter the number 1 into this cell. Under the total bills during refurbishment section below, add the estimated bills for the entirety of the refurb and or selling period. There is room to add your costs for council tax, water, electricity and gas, as well as 4 extra spaces. Other example bills could include ground rent and service charges. Depending on your purchase method in step 1 and how long the refurb will take place, the spreadsheet will then calculate how much you'll be expected to pay in terms of the total mortgage or bridging finance payments. If you have selected cash as the purchase method, this cell will be blank. Remember, these are the total bills during the entire refurb and or selling period, not just the bill for 1 month. Next, you'll move on to step 4, invested funds. This short section breaks down how much money you'll be borrowing and how much of own capital you'll be expected to have to purchase and refurb the property. If you do not have enough cash to purchase and refurb up front, you may want to find an angel investor for financial assistance. An angel investor is typically a high net worth individual who provides financial backing for entrepreneurs and other projects. If you find someone who can provide the cash you need for the project, you can enter the loan amount into this box, as well as the interest rate they will receive per year on their capital, and how long you'll be borrowing their money for in months. Once you have filled in steps 1 to 4, you will see a breakdown of the invested funds in the pie chart below. Lastly, scroll across to the right to view step 5, strategy. This section is broken down into 2 halves. First, start by selecting the strategy you want to analyse from the drop-down menu at the top of the spreadsheet. Choose from sell or hold. In other words, do you want to sell this property for a profit or hold it in your rental portfolio for rental income? If you're unsure at this point, do not fret. I suggest picking one and seeing what the returns look like. If you change your mind in future, you can always select the other option and compare the numbers. If you've selected the strategy sell, fill in the highlighted orange cells that appear underneath. Start by adding your metric goals on the far left. Enter how much net profit you want to gain, as well as what ROI return you want to achieve. ROI stands for return on investment. In this spreadsheet, it is calculated by dividing the net profit by the total capital you've invested into the deal, i.e. profit on sale divided by own capital needed. If you're unsure what figure you want to obtain, feel free to leave this blank. These metric goals are here to help you align a property deal with your long-term goals. Once you've set these metrics, fill out the orange boxes under sold price. This is the sale price you believe you'll be able to achieve once the property has been refurbished or modernised. If you plan to sell the property into individual units or flats, there is room to add up to 10 units. Make sure to allocate a figure for each unit you plan on selling. To work out the possible sold price, head over to Rightmove and go to Sold House Prices and search for similar sized properties within the property deal location in the same condition. Make sure your comparables are the most recent and within a quarter mile of the property to obtain the truest value. Then enter all the information you find into the Research tab. The Research tab will gather all your data and return an average sales value at the bottom. Feel free to use this average sold price figure in the sold price section. Next, head over to the selling costs. Here, the spreadsheet will calculate how much you'll be expected to pay back once you've sold the property. This is broken down into any mortgages, bridging finance loans, or angel investor loans you may have taken out, including the payback of any interest. You'll also find space to add conveyancing and/or estate agent fees, alongside a few other sales for your own costs. More examples could include early repayment charges, bridging finance fees, and any other legal fees necessary for your deal. This spreadsheet will then take the potential sold price, minus the total selling costs and any of your own capital put into the deal, and return the figure in the profit on sale cell under metrics. Here you'll see the ROI based on the profit, as well as the 10 and 20% stress tests. Any sales highlighted in green indicate you've hit your metric goal. To the right of the metric box, you'll see a bar chart comparing the profits from each stress test. Stress tests are important because you might not always get the price you predicted when you sell. This can happen for several reasons, but it's always best to be aware of this and plan a different exit strategy if this happens to you. If you decide to keep the property, select the option Hold from the drop-down menu at the top of the spreadsheet. If you've selected Hold, fill in the highlighted orange cells that appear underneath. Similar to the Sell strategy, start by adding your metric goals on the far left. Enter how much net profit you want to gain every month, as well as the ROCE, gross and net yield. If you are unsure what figures you want to obtain, feel free to leave this blank. Once you've added your metric goals, scroll across to the refinancing section. Note that this section is optional and may not apply to all hold strategies. If you do not plan on refinancing the property, leave this section blank and move on to rental income. If you plan on refinancing, or in other words, remortgaging, go ahead and select which type of mortgage you want. If you are unsure, please speak with a mortgage broker who will be able to advise you. Then, fill in the details, including the refinance valuation, the loan to value, the interest rate per month, and the length of the term in months. The spreadsheet will then calculate the new mortgage amount and tell you how much is left in the deal, based on paying back any other loans you may have taken out. For example, bridging loan, mortgage, or an angel investor loan. If there is money left in the deal, the cell will turn red and display a negative figure. But if by remortgaging you pull your money out and more, the cell will turn yellow, indicating a positive figure and cash surplus. After refinancing, move on to the rental income section. Similarly to the sold price section above, these are the rental figures, or a singular figure, you believe you'll be able to achieve once the property has been refurbished or modernised. This is broken down into 16 rooms. You may want to add data to all these rows if you have a property with multiple rooms, for example, a HMO or a block of individually rented flats. Here, add the rental income for each unit or room. To work out the possible rental income you could achieve, head over to Rightmove or Spare Room to find comparable rentals that are similar to your property in terms of condition, size and location. Make sure your comparables are most recent and within a quarter mile of your property to obtain the truest value. Then, enter all the information you find into the Research tab. The Research tab will gather all your data and return an average asking rent figure at the bottom. Feel free to use this average asking rent figure in your rental income cells and adjust the prices based on the size and condition of your rooms. Lastly, head over to the rental expenses section. This is where you can add all the monthly expenses you'll be expected to pay whilst renting out this property. This includes your electricity, insurance, water, cleaner, broadband, and any other costs you may need to pay, for example, ground rent or service charge. You can also set a percentage for a lettings agent's fee, regular maintenance costs, and vacancy or void periods. If your tenants will be paying for their own bills, only fill in the rows that you'll be paying for. Once you've entered all this information, the spreadsheet will return the numbers under the metrics box to the right. Similarly to the cell section above, any cells that are highlighted green indicate your metric goal has been hit. You'll also see a visual breakdown of the rental costs per month in the bar chart to the right of the metrics box. Now that we've looked through the Financials tab, let's quickly walk you through the Research tab. As touched upon earlier, the Research tab can be used to hold comparable data about your property, including sold price comparables and rental comparables. This tab will mainly be used to compare prices, which can consequently be used in the sold price and rental income section in the Financials tab. However, there is also room to add other useful information, such as the distance away from your property in miles, the total size of the property in square metres, the number of beds and bathrooms it has, as well as its condition and the URL link to the property advert if applicable. Even though these cells are optional, you may find this tab useful to help deepen your research. Now that I've talked you through how to fill in this spreadsheet, I'm going to show you a few example deals. In this first example, we'll be analysing the figures of a property we plan to convert into a buy-to-let using bridging finance. We are hoping to secure the property at $50,000 and spend about 5 to 6k on a light refurb. As we are using bridging finance and we have enough cash to cover the upfront and refurb costs, we won't be using an angel investor for this deal. In terms of strategy, we will be holding this property in our portfolio for some rental income. We'll be refinancing at $60,000 as we use a bridging loan to purchase the property. Looking at some comparables within the area, we believe we could achieve approximately £650 per calendar month, meaning we'd make just short of £300 per calendar month in net profit. This doesn't quite hit our net profit metric goal, so it might be worth changing some figures, for example, lowering the purchase price or looking to increase the rent. My second example is based on a flip project. As we have a lot of funds for this fictional project, we plan on using cash and the help of an angel investor. At a purchase price of $130,000 and $35,000 in refurbishment costs, we need approximately $180,000 for this deal. As we have $100k in cash, we can use the help of an angel investor, where they can loan us $80,000 to secure the deal. As this is a flip project, we expect to achieve a sale price of $190,000 once modernised. After paying back our angel investor and selling costs, we look to achieve $2,000 in profit. As the stress tests at 10 and 20% are negative, it might be worth readjusting to see if we can achieve any higher. We could do this in the form of reducing our purchase offer or taking out a loan, such as a mortgage, so we can reduce the amount of money that we've put into the deal. In this final example scenario, we are looking to purchase an already functioning 6-bed HMO. We are looking to purchase at £400,000 with the help of a mortgage. As no work is needed, we will type the number 1 into the length of refurb cell in case of any non-paying tenants and we need the money to pay the monthly mortgage. Combined, we will need about $125,000 in capital for upfront costs. We don't plan on refinancing the HMO just yet, so we leave this blank. I then added the costs of all 6 rooms, reflecting their size and conditions. And as the tenants already pay for their own bills, we'll leave the rental expenses column fairly blank. Once this has been entered, we can see we could achieve a net profit of £1,400 every month. This hits our gross yield target of 10%, but falls short of our profit goal. Once again, we may need to adjust, for example, by letting out the property ourselves rather than through an estate agent, lowering our purchase offer, or upping the rent. As you've seen from this video, you can see how you can use this spreadsheet for a variety of different scenarios and strategies. The great thing is you only need to add the numbers once. If you decide to change your purchase method, simply select another option from the drop-down menu and add the information to the relevant highlighted cells. With your strategy, you do not have to delete all the figures, just enter them into the opposing section. That way you can easily compare the metric boxes and see which strategy gives you a greater return on your money. But remember, this spreadsheet is to be used as a tool to help you make better investment decisions when it comes to buying property. These figures are to be used as a guide for your property deal, as there are many other factors at play when deciding whether a deal is worth pursuing. For example, its location, the owner/landlord, the tenants, and the history of the property. As always, please liaise with a mortgage broker to help decide which finance option would be best for you. The more times you use this tool, the more familiar you'll become with the terminology used and how the process works. If you have any questions about how to use this spreadsheet that I have missed in this video, please get in touch and let me know. Thank you for watching this video. I hope you found this tutorial helpful. Until next time.